I'm Sasha Nicole.
And I'm Star.
And I'm Dr. T.
And this is Amerikan Therapy, the definitive podcast on all things Black mental health. And we are back and excited. And we have a really exciting show today, Star. What we doing?
Okay, so we've all applied for a loan or two and been rejected, or some of us have. I ain't gonna lie, I have, okay? Back when I thought you just went to the bank and you just like fill out the paperwork and they give you the card, they give you the house, they give you the mortgage. So today we're gonna talk about engaging the financial system while Black and all of the emotional stress, ups and downs, all that stuff that we do when we talk about finances.
Yeah, absolutely. So we have a great guest today. We have Chris Hines, who is an expert in the mortgage and financing field with over 26 years of hands-on business experience. He has a strong organizational and managerial skills demonstrated as a loan officer and branch manager for more than 20 years. He's committed to providing outstanding customer service and considers the individual needs of his clients. He specializes in public relations and consumer education through sponsoring and conducting periodic first-time home buyer and how to refinance seminars free to the community. He has a great level of commitment, dedication, and passion for excellence demonstrated through his volunteerism with the youth. And he's a mentor and has been a head coach and commissioner for youth football for over 20 years. So welcome, Chris. Thank you for coming on. We're excited to have you. And so just to kind of start this off, like Star said, a lot of us have, applied for loans, been denied, been approved. But more recently, there's been a lot of studies with the changes over the years that talk about the impact with mental health and lending. And in particular, found that, things like foreclosure, depression, anxiety, and how it can just lead to a poor mental health and even social isolation with trying to navigate the financial system in terms of lending. And so, if you could just start it off with, all the things that you do regarding lending and kind of maybe kick the conversation off with what you see in terms of the Black community in lending versus working with our counterparts.
Yes. So first off, I want to thank you ladies for making me a part of our podcast here. I'm excited. I was excited in the fact that you all asked me to be a part of this. 26 years of doing this, I can tell you in our communities, it's tough. The first thing we look at is credit. And what I've seen in our communities is that a lot of our people, when they come to apply for a loan, the credit is an issue. So what I do is, the first thing I do is we want to make sure that when I speak to them, I let them know that we're going to start it slow. It's a process. Let's look at your credit. If the credit is not there, I explain to our people what we need to do to be pre-approved. With anything else, when you look at, financing and stuff like that, there are levels of approval. You look at credit score, income, and stuff like that. And in our communities, we as a people are, we work every day, but when we look at student loans, we look at childcare, we have a lot of things that at times won't allow us to purchase the kind of property that we want when it comes down to purchase price. So when we look at credit score, that's the first thing. So the first thing I let everybody know when I pre-approve them, I look at credit score. And if we need to get our credit scores up, I let them know what we need to do. A lot of times we have collections, we have medical bills that our clients might not know about. And then after I pull their credit, I let them know, okay, well, listen, we have a couple of medical bills we have to address, as well as, let's say, we might be late on a car note, maybe 2 times late in the last 12 months. So what I find from that point, it brings on stress. Ladies, it brings on stress. It brings on anxiety. And what makes it tough is, let's say we have someone that their lease is up in 3 months. If we want that credit score up, ladies, we have to really engage, and I have to get with my clients, say, okay, this is what we need to do to pay these things off. And what brings on the anxiety is that they might not have the funds to do it. So a lot of times from when we start to, before we even get to getting pre-approved, it's the fact of getting their credit scores up, paying off debt. So that's where it starts in the very beginning.
Why is there so much anxiety? And this is probably Dr. T, right? To you. But like, why do we have so much anxiety about debt and credit and stuff? Because it's like everybody has, like, realistically, most people have had those types of things, those issues. It's just a matter of taking the time and the steps. But why, like, when it comes to money, it's like, and then we just shut down. I know that used to be me.
I would say it's of course it's always multifactorial, but one of the things I think is we focus so hard on, like, as Chris said, what we want. And we look at, okay, this house is going to cost me this much. I need to be able to pay this much money, and very focused on the now. And all along getting to the now, we're making mistakes with our money, with our lives. And then many times, exactly like Chris said, when you think that you're ready and you've arrived and someone tells you, well, no, your past is still all over this, that's anxiety provoking, because you feel hurt and you feel angry. If I can afford it, why do they care that I didn't pay my car note? I paid it eventually. We get an attitude when somebody tells us something that we don't want to hear.
They got their money eventually.
They got that money. I mean, I had some things happen. And so we get angry, and then we get anxious, and then we get worried, because sometimes, like Chris said, we fantasize about, I've made it, I'm going to do this, I'm going to do that. And we don't plan ahead. So now my lease is about to be up, and I came to you because I thought you're going to help me get this house down the street that I know I can afford. And you're telling me it's not about your check today. It's about all of these things. And you're not going to be able to leave that place in 3 months. Right. And so now that's a lot of anxiety, a lot of worry, a lot of fear. How long does it take? And it feels so mysterious. I mean, I've bought a house a couple of times as I've lived in different cities, and it just feels so mysterious. And it's something that is not easy to see and not easy to understand. Most people, I'm sure Chris would agree with this, don't even understand what their credit score is or how their daily behaviors impact their credit score. So if you chronically pay your bills late just because it's easy for you to wait to the end of the month, but your bills are due at the beginning of the month, you're negatively affecting your credit score every single month. And it takes months to kind of erase what you have been doing. And so
we be so shamed. Like, white people, I seen it. White people be like, I had 2 bankruptcies and I'm gonna buy this house. And they do it. They might not buy it like that year. Or they may be like, okay, I thought I was gonna buy it in December 2020. But by December 2021, they be like finagling, moving stuff around. We just be like, Lord Jesus, I don't know if I even want to go back in here and talk to this man again. They go in there confident, sit down, fill out the application. We go in sweating like, okay, look, I think I had a late bill, a Sprint bill 2 years ago. I know that's me. I'm like, I know I got good credit, but I'm in there like,
well, Chris, kind of similar to what Star is saying, like, how does a white person come in and say, I've had 2 bankruptcies, I don't care, I'm still about to buy an $800,000 house, but we come in and maybe we're only getting approved for the $300 house. I mean, obviously we know that there are some disparities in terms of what Black people are making versus white people, but when you're dealing with, especially our community, the Black community, and you see like maybe, someone isn't understanding that ratio value, or they've been approved for 300, but they want the $600,000 house, or maybe they've been approved for the 600, but they really should only get the 300. Like, kick it to us. Like, do you ever step in and say, listen, you want to look out for the best interest and give them some insight? Like what's some things that we should really be looking for or to do when we come to you as a lender?
So that's a very good point, Sasha. The one thing I stress to my clients, ladies, is listen, we're in it for the long haul. no need of getting a home that we have all the bells and whistles and we're kind of jumping out there and we might not be in it after 2 years. So I let them know, listen, we need to crawl before we walk. I have in our community, like we want the best, and I'm okay with that. I want us to have the best, but no need of getting this big glamorous home when we can't afford it. You understand? So the same thing you just touched on, Sasha, is, so we have a client, first time home buyer. And one thing I tell our people, listen, we have free money out there. I am going to get you this money, right? Now, once we get you this money for the down payment, we need to stay in this house. Now, as we all know, with jobs, we get raises, whether merit or just every year we get raises. So, statistically, within 3 to 5 years after buying your first home, you normally buy another home right after that. So what we tell our people is that, listen, hey, let's crawl before we walk. Let's get a home that you can afford. And whether you get married or you get raised on your job, let's start there before we move up. And what I find is that as I explain to our clients, and I make sure that I buckle down with them to explain to them that no need of getting, this home that if you miss a payment, or let's say you have a car issue and you have to fix that. But if we're so tight with your debt to income ratio, where if you have to get a set of tires on your car, if you get those tires, you're late on your mortgage, that's not going to work. And I explained to them, because one thing from where I started from 20-something years ago to now, I will not approve a loan. I will not let that loan go to underwriting and let them know if I see how they've been spending money. And let's say I look at debit card expenses on the daily. We have, car insurance, car notes, and I'm able to evaluate how they spend. If I know you can't afford a home that's a $2,800 payment, and I think you need to be at maybe, let's say, $1,400, that's where we need to be. And then I tell them at that time, get used to the payment. Not only that, when you first buy a house, let's not jump out there, ladies, and start buying our furniture and all that. Let's get used to that note. Because a lot of us, we're renting, and let's say we're averaging, say, $1,400 in the rental payment. Now we have an $1,800 payment. That $400 means a lot. You're not used to paying that. So in light of what you're saying, it makes, for me, when I convey to my clients, and I take it very, very deep. When my clients, I look at them in time as being a part of me when it comes down to family and anything else. I don't want to just slam you in the house and not care about, can they really afford it? Ladies, we get this all straightened out in the very beginning. I let them know, like, this might not, I hear that you might have your baby's dad who says he's going to give you $500, but we don't know if he's going to come up with this money. You're not married, and I don't want you to count on somebody else's money that you're not qualified for. And if we're counting this money,
we still can't get that money.
Right. That's my point. If we're married,
I think it's so important what you're saying, because I think that one of the stressful things is that people think, okay, I got this nice apartment, right? So I'm in this apartment that costs, if you're in DC, you might be in an apartment that costs $3,000 a month. And so you're saying, I'm paying $3,000 a month. That could be a mortgage. But what you're not thinking about is if the water heater needs to be repaired, or if there's a leak, then you just call the landlord. You don't think about that, right? But if that's your home, you need to have some way to be able to pay for those things if those types of things happen. And so people take their rental amount and translate that. So is there a recommendation that you have? If you're spending $3,000 a month in rent, you should be looking for a house that costs $2,200, so you have some wiggle room. Like, what do you tell people around that?
Yeah, so my golden rule is I explain to our clients, let's look at being around 41 to 45% debt to income ratio. What that means is that 45% of your income in debt is going out. We don't want to exceed that 45% if you're a first time home buyer, because we don't know the incidentals, things that happen, tires or your alternator went out, childcare that maybe the baby father's not paying for this month because he lost his job. So I make it a thing to listen, I know that I might have you approved at 2,800. We might need to be around maybe 2,000 starting now. Times is, depending on who the client is, they're like, well, Chris, if I'm approved here, I got the rest. You just let me do my thing. I try my best to show them, and I give them scenarios of letting them know that might not be the best thing, because looking at long term, within 8 months, 2 years, what have you, if you're late on your mortgage, that is a profound effect on your credit as a whole. We're talking, you have 130-day late, that's not going anywhere, ladies. It's not like where you try to purchase a home a year or two later, that 30-day late's not going anywhere. That's what, I tell our community. I let them know, and this is where the stress comes in. Can I be honest with you, ladies? Last night,
yeah, we
and
need
this
to
happened
kick it to us. Like, you get somebody on the phone, they tell you, man, listen, Chris, I'm good for it. Just give me here. I'm good. You know, Black people, we be like, I'm good for it. I'm gonna get it. I'm gonna find it, and we will find it somehow, some way. So we need you to be like how if I'm on the phone and you be like, listen, I can't do that. Like, I need yeah, kick it to us. Go ahead.
Because some of us will do OnlyFans to get that money. We'd be like, look, girl, I got OnlyFans. So I know
I was thinking about it. I saw what they've been making a month. And listen, I'm not opposed to it. I just need, somebody permission. Now I'll get on that thing real quick.
But so Sasha, that's a good point. But here's the thing, right? I get that all the time. So yesterday, this is yesterday evening, ladies, since the rates have been so low, I average 12 to 14 hours a day, which I have no problem with. My days go by fast because I like what I do, right? But last night I lost a little. Well, I woke up in the middle of the night and I thought about this one client, because Sasha's just what you said. She was like, Chris, listen, I had to get up out my mom's house. I got my 2 kids here. She says, I got everything good. She was short about $2,800 for down payment. So technically, I can't even give a pre-approval unless I know they have that money in their account. So, she tells me, she says to me, well, Chris, listen, here's the thing. She had it all worked out. She texted me about 11:33 last night. I answered back because I was still up, and I wanted her to let her know, listen, I hear what you're saying, but whoever your donor is, I have to look at their bank statement for 30 days. So when I told her that, she told me, bless her heart, she told me, she says, Chris, listen, I'm going to have it. Trust me, because I trust the person who's going to give it to me. I'm going to have that for you in about 5 days. Here's the thing.
Ain't no bank statement tied to that, baby. Because I did that when I bought my first house.
So I told her I have to, because I don't, in this forum I'm in, when it comes down to mortgage banking, I don't make the rules. So I just have to abide by them. And what I try to do for our people is I let them know what we need to do to get there. And however, if you tell me, Chris, trust me, I'm gonna get this, and you don't really have a clue how you're gonna get it, I can't proceed. And I try to explain to them that I need documentation to get this right, because pretty much it's gonna be funds I can't count. If it's cash, no bank can justify where this cash is coming from. So that's what I went through last night with this one client. And I really feel for her because she has 2 kids. She's in an environment it's safe, but it's stressful. So doctor, when you say stress, I feel our community every day that, from whether they're couples that's going through stress, they might have kids in college where, they want them to come home to a house, not to an apartment. I have single mothers that have kids that, we're not getting the child support that they deserve. So every day it's stress, not only on them, but for me. And I'm okay, but I want the best for us. You understand? Because if we don't help our people, no one else will. So that's some of the stress. And to answer your question, Sasha, when it comes down to, let me know what we need to do to get this money. I can give you the formula, but it's the fact of, can we truly get the money? Can we get the gift letter? Can we get money from our parents, grandma? And right now it's
back up. You said something I ain't never heard that before. A gift letter.
Yes.
What's that?
Let me tell you. So Sasha, when someone is trying to purchase a home and they don't have the money, now I can go to my mom, my grandmother. It's supposed to be immediate.
From a donor, because like the young lady, the client, she had a donor. She
Yes.
needed a gift letter from the donor?
Yes. So I issue a gift letter. Now, what I need with that gift letter is just not the fact that you're signing your name. I also need proof where this money is coming from. So we ask for.
Why does that? This is where I feel like, and I don't know, maybe I'm completely wrong, but this is why I think Black people feel so stressed when approaching financial institutions, because if I got my hustle on, if the money is in the bank, why you care where it came from? And I know, I don't mean you personally, Chris, because I know it has to be tough. It sounds like, you're one of the mortgage brokers that really is looking out for the Black community, but you're still working in the mortgage industry with the mortgage rules that are stacked against us. So why is it that they need to know where my money is coming from if it's showing up in the bank on a consistent basis?
Doctor, that's a very good question. So let me tell you where that came from. 9/11. After the attacks, when the United States started digging deep and finding out how they had terrorism in our homeland, they found that there was a lot of transferring of money to support these terrorists, right? So there is a thing called the Patriot Act. The Patriot Act is where the government says, whether me being a loan officer, me being a bank, where we are giving financing money for someone to either purchase a car, a home, what have you, we are supposed to vet that client. We're supposed to find out where that money is coming from. So ladies, let me tell you, before 9/11, let me tell you how simple it was to buy a house. If you all told me that, okay, well, Chris, guess what? Grandma's gonna give me this money. We're going to settlement on Monday. Money's gonna be there. Guess what? We would be okay with that. As long as the money was there on Monday, we're closing. Now, it's not that kind of party. If you say, Chris, my grandmother in Georgia is giving me this money, I'm gonna have to call grandma. Hey, grandma, listen, look here. I'm going to send a gift letter. You need to fill it out, right? And I'm gonna need a 30-day bank statement. If y'all know, I mean, just our family, like my grandmother, my auntie, they don't want to give up their bank statement. They don't want to show you what they have. I've gotten bank statements where they got everything blacked out. Their name, their account number. All I got is a little bit of space where I see what they have in their account. But we can't accept that. But see, that's what it comes down to, because our society, when it comes down to terrorism, what they call drug or street money, we have to source where the money comes from. Not only saying that it came from your account, but now it's got to the point where we want to make sure it came from your job. We don't want to hear that, okay, you got $5,000. Where'd that money come from?
But the
Ladies,
street is my job. Like,
see, that's the thing. Like, can you tell us, like, our listeners, okay, because like I'm on business and I'll go one, if you put more than a $10,000 check in the bank, they're gonna call the IRS. One. Two, like I've been to the bank and took checks to the bank and they looking at me like, the lady was like, what is this? Where you get this money from? The bank teller. I'm like, put that money in the bank and it be from the US government. So I'm like, how you? But like we need to understand, because like a lot of people do hair, nails, kinds of stuff, and they got cash. Like we ain't really cash strapped. That's my perspective from what I see in our environment in the hood. A lot of it is just stuff's not documented, and it could be like if I'm selling jewelry and I'm doing Cash App, should I be taking Cash App or should I be doing PayPal or something more legit so that I can then show like for 12 months, I've been getting an extra $3,000 on top of my salary.
So what's about, whether it's Cash App or these other apps where you get money in, it's about filing your taxes. That's the big thing that Uncle Sam looks at. Fannie and Freddie Mac, HUD, they want to make sure that this money is not what they say, terrorist money, street money, and that's what it is. And ladies, we all know with our people, I got my hustle on as well. So when it comes down to me, being a W-2 bank employee, I have my little hustle to maintain my lifestyle. So like you said, whether it's landscaping, cutting hair, or like you said, selling juice on, I know people that sell, all health juices. If we don't file our taxes, we can't use it. We won't, as a bank, no banks will acknowledge it. It's almost not fair, but that's where society has driven us, where they're not going to allow us just to bring up any kind of cash to say, I got 10,000 right here. You deposit that money if you want to, just like you said, Star, deposit that money. IRS is going to be all over you. They're not going to tell you. They're going to start going through your accounts. They're going to investigate you. And it's a shame, but and it's not because of our people. It's because what had just happened in 9/11. That's what
we got a money launderer as a president who paid $750 in taxes. I'm sorry, suspected.
No, don't be sorry, because it is what it is, and so that's the part that's very upsetting for me, and I think for a lot of us. You have a person that's breaking all the rules, making millions of dollars, and you mean to tell me all you pay was $750,000? I'm sorry, $750 for taxes. And
I'm still looking for the accountant who can help me do that.
There's no way. There's not going to happen.
Cousin, but you're gonna be in jail in about 10 more years. But
why? If other people can do it, why can't I do it?
I got a cousin who can get you down to 750, but I don't know. She ain't certified nothing. When you get that,
I always think Sasha, and then I got Sasha, and then I got another question for you, Chris, because I got props. I'm ready for you this time. So they don't catch everybody who does something to their taxes, but they catch enough of them that I'm not trying to be on the list of people that they might catch. And I don't know, of course, my suspicion is there are many more white people who commit tax fraud, but the ones we see on the news and the ones who are going to jail are the Black and brown people. So you can find somebody who will do it, but then and you might even get away with it for a few years, but they can audit your taxes back how many years? And so you think you're home free, and then here they come and knocking on the door. So,
but what makes it different between, somebody like Trump doing it and somebody like me?
It's no difference. They gonna catch him too. That's what I'm saying. They catch a whole bunch of people. Everybody don't think they get caught, but you only hear about the Wesley Snipes and the Donald Trumps. But it's there's many, many more people in jail for tax fraud and tax evasion than you could ever imagine.
That's a true statement, because there are a lot of white celebrities that we just don't hear because they're not as publicized, but they have a long history of tax fraud and different things like that. So that's true.
Taxes, right?
Yeah, and the IRS model is set up that they let people know this is that there is a threshold that they actually target, which is under $300,000, and they target that threshold because most people in that range, I think it's actually like under 180,000 or something in earned income, because those are the people, and they said, like, I've talked to an IRS agent, I get audited every year. She's like, yeah, because those people are less likely to be able to fight it and to be able, it's an easier case. It's open shut. It's like, you owe $3,000. Now, what you gonna do? You know, right. Versus like me and the H&R Block lady, we probably can't take on the IRS, but Trump can tie it up for 30 years if he wants to, and they're going to spend more money. It's a model. It's like an algorithm that pulls out people.
So here go my next stressful question. So we all get these little things in the mail all the time. If you own a home, you know, you've been pre-approved to refinance, or, you know, get these rates. And I'm like, first of all, how they get my name? And is this stuff legit? Should we be, because people get this and they don't know, right? So should I be following up? These people say I can save a lot of money, and then they call somebody and give them all their personal information. So what do you think about these unsolicited things that come in the mail to try to tell you you can afford this much for a house, or you can refinance for this much, you can get cash out of your house? They have all different kinds.
Right. So, doctor, that's nothing but marketing that they're putting out there. You know, the various emails, the mailers and all that, they have not pulled your credit. They're trying to initiate you calling them so you will let them pull your credit. So when you get these mailers that says you're pre-approved, that's just something to get you to call them. For me, for all my clients I've had for the past 26 years, they call me and I already have all the information. I just re-pull their credit. That's a lot different than having blind mailers going out. So, you know, what I tell clients is, for one, don't trust these mailers, whether it comes from my bank or anybody else. Make the phone call. I never suggest go to our website, fill out this application, because you don't know who really sent out that mailer. They can plug in Bank of America, Wells Fargo, and you might not know, but they can change something, the URL, that's really not Wells Fargo, Bank of America. And now you've given somebody all your personal information. So I never suggest that. What I tell my clients is call me, or if you're with another bank, call that bank, because if they're offering a certain rate, you should be able to pick up the phone and call them, and they'll tell you, oh, yes, we're offering this based on credit score or whatever it is for you to be approved. But I never suggest going off mailers or even emails. Pick up the phone, call your bank, and they should be able to confirm what the going rate is and what you qualify for.
And Chris, can you talk about, because you had mentioned a good point earlier when saying how, and Dr. T, I think you had mentioned it, when someone will have like a $3,000 maybe apartment or rent, but then think that can equate in housing. Can you talk about what happened during the housing bubble, where all these people, you know, had got, you know, these grandiose house, or everybody got a loan. You get a loan, everybody get a loan. And then everybody was foreclosed on. Well, not everybody, but a lot of people ended up losing their home, and it created that market crash. Like, you know, what was that? Because there were people who were assuming loans that they couldn't afford, or even like, what's the difference in some of the loans? Because I know, excuse me, I had a friend of mine who had a townhouse. It had a balloon type of loan, where like 1 month they were paying $1,500, the next month they were paying $2,800. What? Why would somebody sign up for that? Like, what is that?
So that's a very good point, Sasha. So before 2008, when the bubble burst and the market crashed, ladies, let me tell you, there were all kind of products that set us up for failure, especially in our communities. Minorities, we didn't know any better. We just wanted to buy a house. So what happened, ladies, we had what they call stated loans. Do you know what that means? That stated loan, let me tell you what that was.
You pick what income you gonna write down on that piece of paper.
Exactly, Star. Exactly. You listen, I'm in McDonald's.
Financial crisis 5 years before it happened. I used to be a financial modeler for Fannie Mae's book of business. So it's just
You
all
already know.
that shit.
Yes, that's exactly how it was. I work at McDonald's and I'm making $65,000 a year. Oh yeah. By the way, I'm not a manager. I just work there. So that we didn't make those rules, ladies. That came from Wall Street. These were outside of our community. They set us up for failure. The thing of it is, we weren't educated enough to know that, hey, all we know is we can buy that house, that $400,000 house. We don't know. We're going to get there. We don't know how, but right now, I'm going to go with just stated loan. We also had loans called NINAs, no income, no asset. So you know what that meant? Fill out an application and you can leave everything else blank. You tell me that that's not setting us up for failure. So Sasha, you bring that up is a good point. That will never happen again. But what it did, that tumbled over. That was a snowball effect to where we're at now. So many people that I had back in 2008 who lost their homes, thank God, a lot of them are back in homes. But it took so much out of them. I had people that wanted to stay in their home because they were embarrassed if they lost their home. So they was pulling out money from their 401k, their TSP, borrowing money from mom and whoever they could, but to no avail. They were still losing their homes. And so now where we're looking at, I don't see that, at least in our lifetime, I don't see it happening again because it was devastating to the whole real estate market. And that was a big thing. You're talking about stress. That stress started from 2008 upwards to like maybe 2012, because people who lost their homes were trying to regain, being pre-approved or approved to buy another home. And because of the foreclosure rate and them being late on their mortgage, it just didn't happen. Either they had to file bankruptcy or they had to go through so many years or months to be pre-approved to clean up their credit, where it took a lot out of us. So that is what I don't see that happening.
Accountability in that, like
no,
okay, I do a Nina, or I work at McDonald's, like you said, an example, or maybe I work at Target and I say that I want this home I saw, I make $500,000 and I can put that down and actually get the house that costs $500,000, knowing that I can only afford maybe $150,000 house. Like, is there no accountability on either side? How does that, why no one was processing saying, whatever.
On the bank side, there was no accountability. So I worked on the TARP program, and basically taxpayers funded the TARP program. And there was, and this is my opinion of actually seeing the nitty gritty and the loans and whatnot, and the mechanism of how they tried to work with certain people. And what I personally saw was that we took tax dollars, because the economy was going to bottom out. So they took out of our tax base and backstopped the actual bank by saying, we'll buy the junk loan. You can dump your junk. And then we'll create a new financial instrument to kind of offset or back those loans that junk that they know they're gonna buy. And then then they left it up to the bank to work with the consumer. And so the bank was basically, most of the banks, I can't remember the ratio, but it was a very low ratio of people who applied for TARP to try to stay in their house, to try to refinance, to try to restructure loans that the banks were willing to work with. Because like you would see situations where certain banks are basically like a Wells Fargo, you basically have to be in a situation where you wouldn't really be losing your home. You probably don't need TARP in that circumstance, or it's just the interest rate itself. You've been making all your payments, you've been doing all the same things. It's just the interest rate needs to be adjusted down, which was not the case for most of those troubled borrowers because they were junk loans. and they were mixed in with good loans so that they could sell them off and bundle, strip, sell. They take a loan, rip it in 3, 4, 5 pieces, 4 different tranches, and sell it off. So the bank got paid, in my opinion, got paid on both ends. So, and American taxpayers kind of got screwed.
So Chris, where do you see the industry going in 18 months?
So because of COVID, the pandemic, technically, ladies, no one's really talking about it, even the new administration. But we are in a recession. We've been in a recession based on our economy, where it was really vivid in around April going into May, right? Because of the pandemic. So with that being said, what we do to keep our economy going, we drop the rates. So anyone knows that whether real estate agent, loan officer, title company, appraiser, it's a very busy time right now for us, everybody in the business. So with the rates being low, all we're seeing is people refinancing and purchasing. I think because of COVID and the fact that, I don't know about you ladies, but it's worse right now. We hear about the vaccine. I hope all that works out for people who decide to take the vaccine or whatever, but we don't see the end result where it's positive right now. You understand? So as long as we still have this trend of people getting sick, and God bless the fact that people are dying and people losing their jobs, because restaurants, anything to do with daily trading, stuff like that, people losing their jobs. So in 18 months, I have it to where 24 months, even if we see that the pandemic now is being handled and vaccines were good, our economy has to catch up. So even let's say in 13 months, after a year, the pandemic now, we have a vaccine, everybody's getting better. We're still going to have, I feel, the lower rates to keep people motivated to purchase homes, to refinance. So I think the economy, when it comes down to real estate, I feel like it's going to be good in the next 18 to 24 months.
Can you talk about a little bit about how we cultivate, and maybe this is Dr. T too, or anybody, Sasha, anybody, but how we cultivate a more shrewd mindset to finances so that it's not so personal. It's not, I'm a bad person because I got bad credit. No, I just got bad credit. Or I've got something going on right now, but it's gonna be straightened about another 12, another 18. Cause I think one point I had one of my mentors tell me this, that there's nothing financial that can happen to you. Finances are not the end of the world ever, because there's nothing financial that could ever happen to you that can't really be corrected. And most times in 24 months, if it's real bad, 36 months. And in the scheme of things, you had a bankruptcy, but you can go buy a house in 36 months after you have a bankruptcy. I know people who've done it and bought a big ass house. And the other thing is, I think sometimes the way we buy is about emotion and about showing value, because our value center is so internally low. So whereas maybe a white family or another type of family will go buy something that looks raggedy, but it's a multi-unit and it's gonna pay itself off, or they're gonna go buy a house. The people who bought my last house, they literally bought it with 2 families, 2 whole separate families bought the house, and they're Latino, Hispanic folks. And I know my Black neighbors, because they be texting me, they're like, yo, who you sell your house to? They got work trucks. They got clearly 2 whole families, 2 sets of grandmas in the house, but they don't care about that aesthetic. They chopping their money up and they're doubling down. And that's why if something happened, they can cover a loss. Whereas if it's just me in that same house, my back is up on the wall every month.
Yeah.
Say, this probably was a part of my closing remarks as I was thinking about this. We like living on the edge of our money. It makes us feel good, right? Because I got $1, I'm gonna go buy this thing that costs 99 cents. I got $1.50. I'm gonna buy this thing that costs 152 and hope the cashier got 2 pennies that I can throw, right? Because we have worked so hard, we have been deprived. We want to make ourselves feel good. So we tend to live on the edge of our money. And when you're doing that, you're always on the edge, which means sometimes you're going to fall. And like you said, Star, you can climb back up, but every time you fall, your credit score drops, right? So we teach our children, and they grow up living on the edge. You give them $10, they go into the store and buying something that costs $9.99. So if we start teaching our young people, you need to make that $10 last, right? You need to budget it. You need to think about it. And we have to start building those healthy spending habits, because those are I was thinking about this because my daughter, as you guys know, is graduating from high school. So she's going to go to college next year. Prayerfully, she'll go to the college of her choice. But she'll need a credit card, right? That's just a safe, if you can do it, right? So I'm already talking to her about, you're going to have X amount of money in your account. So actually we said starting in January, we're going to put whatever is her allowance for the next 4 months. And I'm putting it in at one time. If you spend it all, you're going to be SOL, right? Because that's what she's got to do when she goes to college. We don't teach our kids these habits. They don't learn how to live within their means. Then they get $10 more, they spend $10 more. And they're always right on the edge. And we just keep perpetuating that as a race. So we buy a house that costs $200,000. As soon as we get enough money, we turn that one in and get a house that costs $300,000 when we didn't need the space. We didn't need that, but we want to feel better by showing others externally with these things that we're doing better. And we got to feel good about who we are and what we have and what we're doing without stretching ourselves so much financially. And a lot of us do retail therapy, and it's, so that's harmful to us, though. We have to find other ways besides food and shopping, to soothe ourselves and to feel good. I'm sorry, y'all.
The two things that we love the most, food and shopping.
I know, but we got to figure it out, because we are not going to be able to accumulate the wealth that we want to accumulate if we're using those two things as our soothing mechanisms.
Absolutely. So Chris, as we close out, could you tell us and our listeners, just in general, when it comes to lending, we're thinking about buying a house, what are maybe just the top 3 things we need to know? And if you could add to that, is it okay to shop around with lenders? Can I let you pull my credit, let another lender pull my credit? Can you just add a little insight on that?
Sasha, good point. You don't want to have a lot of inquiries on your credit. What I tell my clients, if I have a new client that's like, hey, Chris, I'm just, checking around with different lenders. Can you tell me what your going rate is? So my response to them is based on credit score, time on the job, things of that sort. So what I tell them to do, if I'm the first mortgage lender you go to, I don't mind forwarding their credit report to them. Most lenders don't do that, but I'm very transparent. I want to send you, I want to give you your credit report. I want to tell you, based on my findings, what you qualify for as far as rate and what kind of program. And I want them to shop. You're going to find that most lenders, some of them charge points, more than others. You're going to see where you send them out there and they see so many different pricing when it comes down to rate, to down payment.
Well, so what is a point? What do you mean by point?
Good. So a point is an origination point is 1% of the loan amount. So let's say if we're speaking of a $200,000 loan, that 1% is $2,000. So credit unions, banks, they're going to charge you 1%. Now, one thing for me, I don't have to do that. I'm the branch manager of the bank. I want to make sure our people are okay. I'm in our communities. I don't charge points. I want you to get a house. And in turn, when you compare my rate sheet, my fees to someone else, I did it three times a day. Credit unions, some of the bigger ones, I beat them just by not charging points. So it's a good thing to give our listeners some pointers. The one thing I tell them is that don't pay points. Banks don't have to charge it. Majority of them do. So don't let everybody, first of all, if you're shopping, if you can give a loan officer who doesn't mind, like me, giving you their credit report, other bank, you can send to other banks, say, listen, here's my credit scores. Some other guy pulled my credit, and this is what I have. Can you give me an estimate based on what you see? That's what I do. 9 times out of 10, my clients come back to me because I show them I'm not charging any points. Here's your rate. And I think they appreciate the honesty behind it, the transparency that I give them. And if they go somewhere else, and if I can't recall a bank ever beating mine, not saying that my rates and everything are the best, but I can't remember off the top of my head that someone went with somebody else because they were able to beat our rate or the fact that I'm not charging points. So nope, don't go in any bank that's charging points, and look for the rate. The rate is key. As of like right now, our rates on 30-year fixed like 2.625, one of the lowest out there without points.
Cool. Star, what's your thoughts from today?
I mean, I would say my first thing here is going to be, I got a couple of things because I used to work in the back part of the industry, not the consumer side. And part of that was like, so what happened in 2008 was modeled a good 7 years, maybe 8 years even before it actually, probably 4 or 5 years before dates run together, but before it actually happened, because we could see the ratios in the models. You could see where incomes were going, and by zip code, you could see incomes versus pricing. Pricing was becoming unsustainable. And then you could see the credit card and the other consumer debt, credit cards and cars predominantly also rising. So everybody was just ratcheting up the debt model with the income essentially sitting flat. So from a former economist type perspective, I have a few things. Street sense is like money, good money don't move fast, right? So like good money moves, you don't do them fast. They don't materialize fast, right? And I think we're in a culture that's hyper socialized for expediency, and that's good for certain things. But when you're trying to build wealth, it's not really probably the best way to maneuver, because you make a lot of missteps trying to get to a certain place or get to an optic of a certain place fast. The second mechanical thing I always say is like, especially for like single women or single people, like I always say now, and this is a mistake I made that I won't do it again, is that if you're a first-time homeowner, buy a multi-unit, buy an income-generating property if you can. And a lot of people will say, well, I can't. But there are a lot of opportunities to do that. If that's what you target, you can find multi-unit or things that could be chopped up at least to a second unit. And that gives you like an additional wiggle room, economic wiggle room for when things don't go well as it's much easier, I wouldn't say to resell, but it's much easier to acquire wealth with multi-units than it is with typically single family homes in Black neighborhoods. That's a whole nother conversation, because our homes don't appreciate zip codes that are marked or redlined as African American, don't appreciate and value anywhere near as fast as white homes. And that was one of the markers economically where we knew something was wrong. And it's racist, but we knew because we could see like a house, to say, in Prince George's County, Maryland, had gone up 150,000 in a span of 4 or 5 years, where most of these people work or tied to the government. So the incomes don't move like that. This is in New York, where I could be making 80,000, then I could be making 400,000 next year. So I would say, good money and good money moves don't move fast. And then two, if you're a first time, and again, knowing what first time means, I've seen people who bought 5 homes each time they're a first time home buyer because of the window, what is technically a first time home buyer. So if you're a first time buyer, I always push people, try as hard as you can, if you can, to get a multi-unit, get something that starts building a wealth portfolio. And then 3, there's nothing you can't recover from. I think sometimes we're not shrewd because we're fearful. We're like, oh, I've made this mistake. And shame, we're going to do a show about shame, because that's something in our community I've seen a lot of, where shame locks us into places that we don't want to be, versus just, I've seen white people go into business meetings, into banks, into financial deals, and they'll be like, okay, look, so I got 3 bankruptcies. I'm going through a divorce, and they lay it out. With the beauty of telling the truth about your situation and all the struggles is that, like, I got a guy that he'd be like, when I bought my first home, the guy said, I laid everything out. My realtor was this old redneck white dude, rest his soul. And he literally was like, just tell him the truth. And then the guy's in there working magic. And he worked me a straight deal and did me right, And so I think if we could be shrewd and more comfortable being like, it's not shameful. Everybody has financial issues. You could get help, because somebody like Chris could be like, by the end of this year, we're going to get you in a house, but we're not going to get you in a house now because you're not ready. You might even qualify, but you ain't ready. And even if you don't qualify, I'll get you there. Give me 12, give me 18 months. So I would just say the last thing is like deconstructing the shame and all this needing value from outside ourselves. Because people who value themselves, they can walk in a room, shoulders back, and be like, look, I got $5, but I want to make $1 million. And I've seen them do it. I'll be like, damn, where's I wait 10 years to walk in the same room. And they're like, you should have come in here like 9 years ago. That's all I have.
Okay. Dr. T, what's your last mode of just some add some of that psychiatrist magic and how we work these things?
Let's just pick up on what Star was just saying about what we value. And so if we start to value ourselves, our minds, things other than external showy things, then we could start to change our behaviors. But because we value things that are external and that are fleeting, and mostly that don't have any actual concrete monetary value, we end up in these situations. So if we begin to shift what we value, if we value our friendships, if we value loyalty, if we value consistency, we'll make different choices in our life. And then we can find ourselves in different places.
Okay. I guess to close out, I mean, y'all know I'm a work in progress. I like them shiny things. I value all of the material. But I also value, the friendships, the loyalty. I gotta admit, just being transparent, I've always been that person who's kind of been like, I'm that person like the Drake, like YOLO, you only live once. I'm gonna go ahead and bust it all out and then be like, shit, like what am I do now? So that has not served me well as I've gotten older. I made a lot of mistakes kind of being in that mindset. I've had to learn how to be more constructive in deeply believing that you should enjoy life, but enjoy life within measure. And within measure that is not necessarily you have to recover from, but enjoy life within the means where it's not about recovery, it's about sustainability. And right. So I'm in that mode of like, I can still kind of YOLO it out, but still be sustainable and be like, baby moderate. And, maybe not like go for like that really nice Louis bag that came out that I really like. And it's like $4,500, but maybe go for like the baby Louis that I like. And it was like maybe 800 and it was, secondhand, like, cause that's okay. Like it's still a Louis, like it's still valuable, So, but at the end of the day, just rearranging what we find value in, honestly, like Dr. T said, because there were a lot of things that I wanted to do or that I found value in that really ain't that valuable. Like, You going like, you know, in my 2 chains, they're gonna bury me inside the Gucci store. What they gonna do? You know what I'm saying? So, you know, you have to think about those things and find a measure of sustainability within the things that you love. Cause you know, y'all know, I think I'm Diana Ross, baby. Like I'm, you know, diamond out. So, but it, you know, I've had some hard lessons, you know, with that and some losses. And so we have to be, you know, transparent in that. And so like Star said, and like Dr. T said, you know, as a community, and then going to people like Chris, who looks like us, who can talk to us in the language that we understand, be culturally competent, and be transparent with us, you know, that's what we need. We need more people, because there's a lot of us who are not in the mortgage industry and who don't know the language, and we need that. And so we applaud you, Chris. We thank you for being on and just, you know, being transparent, caring about the community and helping us and everybody. Chris Hines, great guest. Thank you so much. You have a lot of knowledge, 26 years. And no, we appreciate that, because we need to start creating generational wealth, and starting here is a part of that. So we thank you, Amerikan Therapy. Follow us with the K, Amerikan Therapy, on all channels, and we out.
All right. Thank you, Dr. C. Thanks, Star. Thanks.